Hey, my name's James Nicholson and welcome to my YouTube channel. Now, today I want to talk about tomorrow's inflation data. You see, tomorrow is the update, the monthly update on inflation data, and it's not sounding good. You see, what happens is some of the data gets leaked out to the press prior, so the stock markets can get ready and preemptively price in what they feel is going to happen. So before we jump into that, make sure if you haven't done already, you subscribe to the channel and hit the bell notification. We had great subscribers over the weekend. We're at 6,000 subscribers now. The views are going up as well. We're at 75,000 views every single month, which is bonkers. So make sure you do subscribe. And while you're here, smash that like button over there, guys. That really helps with the YouTube algorithm. And every one of you that smashed the like button, you've helped get more views on these videos. So quickly smash it right now and do your bit. So, inflation. Well, inflation officially sits at 8.7% today, Tuesday. And tomorrow is the new data. Now, I recall, and I shared this on the channel, the Bank of England said very clearly 3 months ago, inflation was going to fall, not jump. I wish they would jump off a cliff sometimes, but inflation would fall off a cliff this quarter. This is the last report this quarter, and it hasn't happened. In fact, tomorrow's inflation data, the markets are pricing in now 8.3%. No difference at all. In fact, that means prices are still going up, just less slowly than they have been. That's really not going to help people, is it? You've got interest rate rises, you've got inflation and food and all these things still out of control. And it's a little embarrassing for the Bank of England considering other countries have got this way more under control than we do. In fact, it's embarrassing for the government as a whole. America's inflation, yes, some of you will say that it looks at different things, but it's 3%. Right, that makes a big difference. And in Europe, there's lots of places that have got it below 5% now. And we're still way up here at 8%, even with 13 consecutive base rate rises. So what's going to happen? Well, probably we're going to have another big interest rate rise off the back of this. The Bank of England don't meet this month. They meet in August. Summer holidays, right? We've got to get the priorities right. And so in August, we will have an interest rate rise, I'm sure. And I think it could be another nasty one at 0.5%. Now, the problem is these interest rate rises don't seem to be doing the job. And there could be a lot of stuff that the government could be doing to help. Now, whether you think or not, Brexit has been a problem. And because we have tariffs on import, so that means the food that we're importing, and we import more than we export, the food that we import, we're putting these taxes on it, which is costing us more money. When we were in the EU and it's a free trade region, we didn't have that. And so that doesn't help us at all. We're printing tons of money. And it really doesn't feel to me like the government and the Bank of England have got a real plan that's working to get this inflation sorted. The Rishi Sunak and the Conservatives, they don't have long left before people are making their final decision on who they're going to vote for in the next general election. And it can't be good for them if house prices are going down, mortgage payments are going up, credit card payments are going up, food and drink and going out and everything that's getting more expensive. And all you're doing is cranking up the interest rates that's going to bring on a recession. So there's going to be mass unemployment and people losing their jobs at the end of all of this. It's a very, very difficult decision. But as property investors, what do we do? Well, there is opportunity there. And that's what I want you guys to understand. There are some people that just need to sell deals. And I'm looking at a deal at the moment. I haven't been able to get up there. It's off market, so that's good for me, and it's not as stressful. But there's a deal that I'm looking at up north, and someone commented on it that I was a liar about this deal. Well, hopefully I'm going to get a video and show you around it. But this is a property with it's all under one title. and half of the building is run as an HMO with 4 rooms, and the other side is being split into 3 different flats. It's only on for 120 grand, and I think people find that that's hard to believe. Why would someone sell it so cheap? Well, the reason is they couldn't sell it at a higher rate. It just wasn't working. There's still tenants in there. There's some complications with the planning that we'll need to fix and sort. But the fact is, they just want to get back the money that they owe the bank. They just want to clear their debt off and focus on other things. And some people will do that. And there are opportunities all around when you look at this kind of stuff. In Dorking, we're looking at properties as well. And there are many properties that are still well over 200 grand for a 1-bedroom flat. But there are also some deals where people just want to sell fast because it's a probate sale. They want to get the cash in the bank. They know interest rates are going to keep rising. They know flats in Dorking take a long time to sell. People want houses in this area more. It's not like London where people love flats. Dorking, it's not really that kind of area. So it could sit on the market for a while. There's a risk for them that the price will go down. So they're priced it for a quick sale. And so you need to look at these deals and find this kind of stuff in the market, because those deals do exist now. They didn't 6 months ago. They didn't a year ago. It was very, very hard to find good deals because every man and his dog was going for them. You could put a deal in an auction and it would sell for more than it would have got with an estate agent at certain times. But now, not necessarily because the market's crashed, but because people think it could crash, there are some people that just want out today. They've got a Section 24 difficulty. They're paying too much tax on the property. And if you can take it off their hand with a fast, speedy sale, then that's going to make a big difference for them. So inflation isn't shifting. And the only real positive for us as landlords is there are some deals out there, 1. And 2, the other thing is that the debt that we've got is still getting eroded. So 8%. If you're 100 grand, the value of that debt, the buying power of that debt is £8,000 more next year. That's kind of a good thing. Well, it's a very good thing. And so that is positive. But we've got to be prepared that interest rates are going to go up. But now's where you make good deals. And so find deals that work, fix them on an interest rate that you're happy with, negotiate hard. Let people know that prices could come down, and so you want a really good deal if you're going to be even considering making them an offer. And if you do all of that stuff, you can make yourself a lot of money in these sorts of markets. It's just really knowing what you're doing. And if you want to come along and let me mentor you and help you do this stuff, you can join our property accelerator for just £1. And so I'm going to pin a comment below, and that will teach you serviced accommodation, HMOs, buying from auctions, refurbishments, all of these things you'll learn. 7 days, you can get a trial of it for £1. It's well worth doing now. Now's the time to get educated because deals are coming on the market. So come and learn how to do this for yourself. Do check out all the other content on my channel. Give me a quick like if you didn't already, and go and watch this video right here.